We have prepared some highlights of the key changes to superannuation from the budget for 2022 to 2023. This information is general in nature and does not take into account your personal situation and does not represent personal advice. If you do require assistance, professional advice should be obtained. There are 6 key areas we will cover, and the following key superannuation changes apply from the 1st of July 2022. The first key area is superannuation drawdown. The 50% reduction in the minimum amount that can be drawn down from a superannuation account-based pension has been extended through to the 30th of June 2023. As you can see in the table provided here, for an example, a person under age 65 can draw down a minimum amount of 2% from their super account-based pension until the 30th of June 2023, instead of the regular 4% minimum that they would have been required to draw down from their super account-based pension. The second key area is work test changes. So from the 1st of July 2022, members aged between 67 and 74 will be able to make personal contributions to super without needing to satisfy the work test. This includes non-concessional contributions, salary sacrifice, voluntary employer contributions, lifetime capital gains tax contribution, and personal injury payment contributions. Currently, if you are aged between 67 and 74, you can only make or receive voluntary contributions, both concessional and non-concessional, to your super if you meet the work test. That is, you must work at least 40 hours over a 30-day period in the relevant financial year. The work test is still needed for personal deductible contributions into super. There is no change to the maximum age for making voluntary super contributions. This remains at 28 days after the end of the month in which the member turns 75, regardless of the work status, excluding downsizer contributions. The super fund can only accept the mandated employer contribution and downsizer contributions when a member is age 75 or over. The third key area is the bring forward rule. The bring forward rule is the ability to make non-concessional contributions of up to 3 times the annual non-concessional contributions cap in that financial year. This third key area is increasing the access to the bring forward rule, allowing you to make extra non-concessional contributions without having to pay extra tax. The maximum age for the bring forward rule will increase from age 67 to age 75. If you are under age 75 at any time in a financial year, you may be able to make non-concessional contributions of up to 3 times the annual non-concessional cap in that financial year. The bring forward rule will be available to members aged 73 and 74, subject to them meeting the total superannuation balance requirements. If you are 75 years of age or older, your fund may only be able to accept employer contributions and downsizer contributions. The fourth key area is downsizer contributions. Lowering the downsizer contribution age. So the minimum age to make a downsizer contribution will reduce from age 65 to age 60. Downsizer contributions are where a member can contribute up to $300,000 from the proceeds of the sale or part sale of their home into their superannuation fund. The fifth key area is First Home Super Saver. Increasing the maximum release amount under the First Home Super Saver scheme, a member will be able to release up to $50,000 of eligible contributions under the First Home Super Saver scheme to purchase their first home. Currently, the maximum release amount is $30,000. There is no change to the annual voluntary contribution limit, which will remain at $15,000, meaning that a member will need to make eligible contributions over at least 4 years to take maximum advantage of the First Home Super Saver scheme. The sixth key area is income threshold for superannuation guarantee. Removing the $450 monthly income threshold for superannuation guarantee purposes. Currently, where an employer earns less than $450 in a calendar month, their employer is not required to pay superannuation guarantee on those earnings. From the 1st of July 2022, this minimum superannuation guarantee threshold will be abolished and an employer will be required to pay superannuation guarantee on earnings less than $450 in a calendar month.